Shabash! Support and resistance is a powerful technique to help you identify potential trades, but individual levels can only tell you so much. Markets often follow a structure. They trend up, down, or sideways. Knowing how to spot a trend can help you make informed trading decisions. Let's take a deeper dive to see what I mean. Market structure is essentially where the market is moving. So which direction is the market going? And there's three types of structures or trends that the market can move in. So there's an uptrend, also known as a bullish trend. There is a downtrend, also known as a bearish trend. And there's also a sideways trend, which is often called consolidation. This is when the market is moving in an upwards direction. Now, in order for the uptrend to be consistent and a bullish uptrend, then you need to have two factors. Okay, the market needs to be consistently producing higher highs and higher lows. Now, what do I mean by that? Let's jump on the charts to have a look because it'll be easier for you to understand. So if I look at the US dollar index here, this is the daily chart, okay? So what do I mean by higher highs and higher lows, okay? Because this is the foundations of what makes up a bullish trend, so when the market is going up, okay? So if we look at the market here, if I just draw a simple trend line from your drawing panel, and if we go from this low here, okay? So if we're looking at the market, you can clearly see the trend is up, but what is a higher high and what is a higher low? Okay, so the market moves up, that there would be your higher high, okay? And as the market comes down, that there would be your higher low. Now, in order for the market to produce a new higher high, it has to be above the previous higher high, okay? But it can't break below the previous higher low before that, okay? So back to the beginning, we've got the higher high, the higher low, then the market pushed up. We broke above that higher high there, which means the market continued higher, and we produced a new higher high, okay? Now the key factor here is when the market did retrace a little bit and we got the higher low, this higher low was above the previous higher low, okay? So you can see the trend forming here. You've got your higher low here, and then we go up, you've got your higher high, and then your higher low. And again, your higher low there is above your previous higher low. So the market is consistently producing consecutive higher highs and higher lows, okay? Now, interestingly, if you just go to the end of the chart, we can see from the latest higher high, the market didn't really produce a new higher high from this higher low here. The market broke below this higher low and then started to trend downwards. So as the structure of that market broke, the trend changed. So this can help you identify possible trades. Now, if we flip it to the other side and we say, okay, what is a downtrend? Okay, what is a bearish trend? Well, it's the opposite. It's the opposite of your higher highs and higher lows. It's your lower highs and lower lows. So let's look at a chart so we can see that. So this is the US Tech 100, which is also known as the NASDAQ. And this is again on the daily chart. Now I'm just going to grab my drawing tool here from the panel. Just draw a trend line to help us identify where the market is trending. So we can see here that the market is trending lower. Okay, we're in a bearish trend. Now, what identifies as a bearish trend? What makes the structure a bearish trend? Well, it's lower lows and lower highs. Okay, so it's the opposite of what formed a bullish structure with your higher highs and higher lows. So if you look at the chart, you can see that the market is consistently moving lower. So you've got your lower high here, and then your lower low here. And then the market pushes up, and then that's your latest lower high. Now again, your lower high is below your previous lower high. Okay, and then the market moved lower, and then you formed a new lower low. And again, the lower low is below your previous lower low. And then the market's pushed up, lower high, below your previous lower high, and then we've pushed lower. Okay, so at the moment, the market may produce another lower high here, perhaps at this trend line resistance, and then the market could go lower and could produce a lower low to keep the bearish structure and your bearish trend intact. And the last market trend is a sideways trend, also known as a consolidation. Now, this is where the market isn't making any higher highs and higher lows. It's not making any lower lows or lower highs. It's making equal highs and equal lows. So if you can imagine, the chart would just be going like this. There's no movement. There's nothing really telling you where's the market moving. You're range bound. You're moving within, your support and resistance levels or your support and resistance zones, and the market isn't going anywhere. So let's take a look at a live chart. If you look at Palladium here, this is a daily chart, okay? And you can see the latest price action here from about June. You can see the market hasn't really been, in any trend. There's no bullish trend, there's no bearish trend, it's just moving sideways. It's in a consolidation period. Okay, there's no momentum anywhere. No one really knows what direction the market's going to be moving in. So if we get our drawing tool here and draw some support and resistance zones. So I've taken the high from this candle here and then the candle close there. So if you remember from our previous videos, that's how I identify support and resistance zones. Okay, so let's just draw a box on that zone so we can see a little bit clearer. And then what I'm going to do is draw my support zone now. I'm going to take this low here, which is actually an equal low to there. And I'm going to take this candle close here. So I'll draw my zone over there. And what we're really focusing on here is just the price action from June. So just from here and what's happened thereafter, okay? You can see the market isn't producing higher highs and higher lows, it's moving range bound, okay? So you've got your equal high, equal high, equal high, equal low, equal low, equal low. They are consistently moving within your support and resistance zones. The market hasn't moved above your resistance zone, and it hasn't moved below your support zone. So until that happens, there's no clear trend. The market's going to continue to consolidate and move sideways. So ultimately, once you are able to identify which trend the market is moving and identify the market structure, those building blocks, the foundations of what is keeping that structure going, okay, those higher highs and higher lows, the lower highs and lower lows, then you will be able to identify possible trades, because you know which direction the market could possibly be moving and where the trend is. Understanding market structure is an important step in identifying potential price movements, and it can be a key element of using support and resistance to build a trading strategy. In the next video in this course, I'm going to go through everything we've covered so far and take a look to see what it looks like on some live charts.